sure how we're going to do it, is this video is about errors that could happen in Xero because of a feature called like bills to pay. So basically, I don't know 100%, but like here, for example, here's bills to pay. So how it works is technically before you make a payment, the idea is you get a bill, and whether it's the gas bill or the internet bill, and then what you're supposed to do in like the perfect flow is you create a new bill, you put it in here, you make this the actual transaction that's going to really show up on the P&L because it's the bill. And then what you do is you make it a bill, and so you should be, then the feature is you can then run a report for all the bills that's either paid or not paid. So the reason why that's helpful is if you want to know how much bills you owe and what's overdue. So, we might say to ourselves, wow, this is really cool. Why don't we use this instead of a separate tracking thing? Because we have a system, right, where if your accounts receivable and account payable, you want to put in bills and you want to put in things. And you can, and there's a bunch of features, but there's some reasons why it gets confusing. So it's only useful if you're going to be 100% on it. If you're not, then it might confuse you instead. So that's the difference here. So, for example, it's great because it gives you reports. So let's say we do a new bill, and we put, I owe ice cream shop $500, and let's say actually, is this a bill for purchases? Oh no, this is a bill. This is bills. No, this is bills to pay. Yeah, because I'm purchasing it. Okay, so let's just say I go to Walmart, and then I don't know. Let's just you can do this. You can do the due date, and you can just do like, and then you just put one. Let's just say it was $100, and then just because I don't want to make sure. Forget that, right? So then this is going to be the P&L when you do it. So let's just put under, okay, and then let's just put it under, make sure, okay. And I think this column, Grace made this for this is a column we create. That's a custom column. So this is property. And this is a tracking option. So it's sort of like, yeah. So these two are custom based off of, just like you can create custom tags. And in Infusionsoft, you can do custom tracking categories where you almost like tag the transaction, and then you can run reports off of it. Yeah, so it's pretty cool, and then you just have to make sure you're consistent because it's easy to forget to tag it correctly, and then when you run the report, and let's say you want to do everything that was paid via Cash App, and you forget to do it, and you run the report, you're going to be like missing a number. So I guess what I'm saying is sometimes like I like it, and I've tried to use it, but because I don't stay on top of it, and then if I half do it, and then it just becomes confusing because now the reports kind of work, but they kind of don't because we didn't stay on top of it, or I didn't convey to Grace, or I didn't double check Grace's work that everything is exactly on the system we're doing. So that's what's a tricky thing. If you run a report, for example, you know how you have your reports, and we have the categories for the properties, right? So what if I came in, or what if somebody else came in? They put this bill in. They're doing it quick. They didn't put the property. It's not going to show up. So that could be a way where you could be missing an expense because you're filtering it by property, assuming that every time whoever put in an expense put it in correctly. And then the problem could be, what if they put it for a different property? And so that's why it's so easy. Real estate's so easy because everything is the same every month, pretty much, except taxes and what you should be billed for, not the amount, but from the company. Every month you should get a bill from certain companies, right? So it makes it really easy to know. But when it becomes one-off things, maintenance, like a repair or supplies or something, if you were to assign ice cream to Stuyvesant or Marquise, it'd be pretty hard to tell the difference. Like, well, maybe they needed the ice cream, or let's say we put roofing. If this was roofing, then it becomes really hard to pinpoint. So really the end goal is for us to go through the transactions regularly, and then for you to I guess maybe either put notes for Grace for her to categorize it correctly. Okay, so the issue here is that if I approve this, okay, let me just go back to how this works. Okay, so yeah, you have description now. One thing to keep in mind is when they download the information from Xero, for some reason the description often takes on like the payer information, and it's really confusing, but for some reason that's the way it downloads, but that's not how it should be set up. But we can't control how it downloads. So that's one weird thing, and why you might see duplicate descriptions, or I don't know if the other issue that I mentioned was the rules, where it auto assigns a category, an account. When I say category, I mean account, so excuse me. And this is called chart of accounts. And then, or it can auto assign, it might even auto assign tracking categories or descriptions, or autofill. So that can be where it can be confusing, where it's automatically doing it, and it could maybe not be from the system. I haven't studied it well enough. Okay, so now what we're going to do is we're going to approve this. Okay, and we're going to remember because it says fake in it. So technically, let's go through just some features of Xero. If I search fake, will it come up? No, that's not cool. That's not cool, huh? Technically, it's a bills to pay, and it hasn't been paid. Okay, so now where's this going to show up? So we're going to go to all, and we had this payment from Walmart. Okay, so this is under all. That's correct. We just created a bill. Now, however we put it is we didn't pay any of it yet. It's due $100. It's due on the 10th. It's not overdue. We did click approve, which means that it shouldn't be waiting for approval. It should be, oh no, maybe it is. Okay, so actually it is. Oh no, it's waiting for a payment. Okay, so how the system can work is you can make something like, let's say we have a purchasing staffing person, or we get bigger, and we have someone who's fully in charge of purchasing, like, I don't know, materials and all this stuff to do a construction, or even the contractor. And the contractor says, you know what, we need $5,000 of roofing, and we need $2,000 of glue, and I have all these bills, like how kind of Jerry does it, right? He or someone could submit the request or the bills, and they could put it in, and we can actually assign this as, this is waiting payment. Let's try another bill. You can actually, depending on their role, I think they can do a new bill, that's, I think that needs to be approved or is draft. But I think because of our settings, we are the approving person. I don't think it has that. But I think if you were, like, let's say you were set up as the purchasing manager, and everything you just wanted to purchase, I or the head person needs to approve, you would probably only see like requests for approval. So then it would go from create the bill, and it would go to either draft, like you're finishing it up, you're waiting for pricing, or it would go to waiting approval, and then technically the head person, let's see, I would come in and say, yeah, that sounds like a good price, or that's too expensive. Like I'd say Jerry's quote for $500 to move Reed was like way too expensive. So I'd say like ask him for a reduction or find somebody else, right? And then waiting for payment means I approved it, and we have to pay it. Technically, you can set like a planned date for payment. So let's say we're like, yeah, we're gonna, and so then I think that you can see it across here, and that's important if you're a company that has a lot of costs. And in a sense, Alana had a lot of costs, so it had rent and it had payroll and it had all these things. So you really wanted to see every day what your next bills were, because you wanted to know how much money you had to have come in to cover all these upcoming bills. So that's why plan date is useful. I think the question is okay, so we have due date. So it clearly marks things like red. So I'm gonna finish the whole like process here, and then I'll talk about some issues. All right. So far we've created our fake bill from Walmart. It doesn't even show. It would be nice if it showed what it was for, right? But I don't know if we can change the rows here. And then once we pay it, it can go to paid. It'll show under paid. And right now, let me actually go one more. Okay, repeating. So this is where this is actually where an error can come up that you have to watch out for. Is this is kind of where I get really nervous about using bill pay, especially repeating, is because I think if it's auto approved, and you'll have to double check on this for me, it's going to show up under as a bill. The question is see, the description is the same. So it looks like, because it's an auto bill, and I'm not even sure if we're still using this and what, but like, okay, so this is me editing the repeating bill. And it's like electricity, $295. This is, I know I'm repeating myself, but what I'm saying here is I'm not exactly sure how this appears, but I have seen it where it appears as, this is just the bill, right? And it's auto approved. And bills, I think, technically will show up, depending on the settings of the report, could show up on the P&L, even though it's a repeating bill and there's an accident, and it was never, it was never really supposed to be there. And that can throw you off, because then you're going to say, oh my God, we paid a $295 bill. But the second thing is, maybe it was never paid. Maybe it's just approved and it's supposed to be paid. I think payment services disabled. So maybe, I'm not sure if Grace did that for a reason, or what. Really what we should do is just delete this. I don't think we need to have this bill. Just, immediately we see some issues. Every month, it's helpful, but what my concern is that it's going to show up. See, what is this for? So that means this automatic bill, which is for Reed Street, is going to show up for, I don't know. Is it going to show up for Duquesne Light? 292. Let's see. This is 2019. So I'm not even sure why we have this as repeating, these, I don't know, you have to ask Grace, but I think we should just ask her if we need it and double check on how it shows up, because I think that it can show up on a P&L, and the thing about a P&L is that it depends on how your bookkeeping method is. And I'm going to try to say this really simply, but you can either have an accrual method or a cash method. Accrual means that if I tell, let's say I tell John, hey, I'm going to hire you for redoing my roof, and it's going to be $5,000. He sends me a bill. It's due, let's say, today. And I say, you know what? Things have happened in the world. I can't pay you right now. I'm sorry. I'll go on a payment plan, and I'm going to pay you next month. And an accrual method, you charge, it's not based off of the money received. It's based off of bills that you get and need to pay at that time, and revenue that you were supposed to get, even if you did not receive the money. That's usually for like bigger companies, and it's kind of complicated, you can imagine, right? Because you didn't receive the money, or you did not pay out the money, but you need to put it on your statement as if you did, because it's to them it's a liability. You may not put that you paid it, but you will put that it's an expense, and then it'll go under as a liability expense. So you don't need to know too much about it, other than that is not what we do. Small businesses do cash. I don't care if someone says, I'm going to give you $1 million. I get all excited. If I never see that money, I'm not going to put down as I received it or revenue. And if I tell John I can't pay him for his roof until next month, it's not going to count as an expense for me until next month. So the reason why that's important here is that these are all bills that we think we're trying to make our lives easier, right? And put auto expenses and stuff. See, at least this is as a draft. But if it's auto approved, I don't know if the system is kind of doing it like accrual or something, and it automatically puts it on our P&L as if we had that bill, in which case you may possibly, for example, Duquesne Light, if this is, I don't even know, like we'd have to go to Duquesne Light as a vendor. But if, let's say, Duquesne Light, let's say this was a realistic number, we know we're not going to pay $300 a month for electricity. Let's say it's like $50. Okay, so let's say if it says 55 or something, right? It auto-approves. Now you go in, let's just say it auto-approved, and I don't know if this is how the bills work, but I think it's either repeating bills or repeating expenses. I think there might be a repeating expenses thing. I'm not sure. Maybe that was bills, purchase orders. Okay. But you might see that, and if for some reason the settings are show P&L with bills, even if they were not paid, you might see that, think that it was paid, think that we paid a bill, or see double, or think that we did pay it but we didn't. And so that's what I could say is confusing. So I don't think we should use this feature because it's confusing. But I think draft could work because it doesn't go to, it's a draft. Then I think Grace put this in because I told her we're going to start paying for Zoom. So that's a reoccurring bill. So I guess my conclusion here is the reason why, this seems like a pretty good system, right, for all our bills and stuff. But I haven't perfected the system, and it's also a little bit confusing, and you can't see a calendar, blah, blah. So I ended up being look, I just need a way to predict what my expenses are going to be, edit it quickly, send information. And so I thought I'll just use ClickUp and just not use this feature, even though it seems to be made for this. Because I don't know if it's getting approved and it's going to the P&L and confusing us. And the second thing that can happen is 90% of the transactions you see in Xero are downloaded from the statement. And so that's great, right? Because that's it's hard for human error. Whether I give Grace the wrong receipt, Grace enters the wrong information, whatever. So most of it is correct unless it's cash. So, or something like this. So, but the thing is obviously that happens. So the other thing with bills is you could put a bill in, right? So this was reoccurring, right? And it could be, you want to use it. What if we use something where it's not accurate or something? But we could approve it, and we could accidentally even say that we paid it. You can put that you made a payment for it with a check. And then you would have to cross-reference that check got cashed and blah, blah. And that happens. We use checks sometimes, but what I'm saying is that we have to, just because I'm not a superstar at this and I don't watch it a lot, I wouldn't say that everything is perfect and I understand all the functions of the way the system works. And so be careful. If you see that it's a bill, if you come across something that doesn't make sense or something, double check that it's an actual transaction downloaded from the bank. If it's not, if it says it's a bill that was approved and paid, double check that that's accurate. Okay, bills could be wrong. Let me make sure. Check with Grace, check the statement. You just have to do anything because we don't use it often. And we tried, and I think it messed us up a little bit. So, I personally would just delete this. I would leave the draft as Zoom as draft, and maybe even Comcast. Like, I think we had, yeah, I think we had, for example, so this is good. So now what's good is Jerry's one, because what we do is technically make it like Jerry sent us a bill for the $204 for cleaning, and then Grace makes a bill up for Jerry's company, and then we pay it. So I like that because it's not a reoccurring bill. She does it, and because we can then match the payment. So she made this payment, and then this is a great example. So she created that bill in the bills pay department, and then when the next day when the transaction for the payment got downloaded, almost like a check, but it's not, right? We do it through PayPal. She would see that, okay, this is $106 where I made that payment. And the thing is we made the payment on the 9th. The transaction came in on the 10th. So it's like the check got cashed on the 10th almost, right? Because she made the payment through PayPal on the 9th. So this is reconciled, as in like these are connected, but then, later then she'll reconcile the statements, which is totally different from what I'm talking about right now. This is just reconciling like a download to a bill. So, but then statements would be actually matching the actual statement transactions to a period from the ledger. Yeah. But just to go back I guess what I'm saying is that there's a place for bills, and I think it can be useful. Just keep in mind that there can be errors, especially from repeating bills, and I don't recommend that. But if there is a draft, I think then we know we're controlling it more, and then we can go in and do an approval or move it over. Generally repeating bills I think there's two uses. Is to save time, because we'll have Zoom every month. I actually think I canceled it, and then I have to restart it because we're still using it. So that's an example of how something can get confusing. I'll say, hey, Grace, we're going to use Zoom every month. And then I'll be like, oh, wait, Grace, it sucked that last interview. I canceled that thing. And then she might enter this as a bill. And I'm like, actually, no, that was not, we never paid for that. But she's like, oh, I thought you were going to pay for it. So I put it as a bill. So that's where it gets confusing unless you're super on top of it. And, with you being like checking it, hopefully that'll solve a lot of these issues. So yeah, that's possible. Yeah, exactly. But, what I like about Jerry's setup with what Grace does is she creates it and she immediately pays it. So it's pretty much tied up. And, like an ideal situation was, so this was, maybe Grace created the taxes bill, and then when she got my receipt, she marked it as paid even though I made the payment. So that's a version. An ideal world, we could take all the expenses or the bills that we know we're going to have for real estate and put it in and just mark it off as paid. But it just hasn't seemed to work well, and it's not a very robust system. You can't total the amounts for different categories. You can't filter. You can't see a calendar. And so then all of a sudden you keep two records, right, just to try to maintain Xero and then to maintain our own system. And that's why it's failed. One more thing I was going to tell you about. Is it about Zoom? Right. Oh, I wanted to delete the Walmart payment. And the Walmart bill. Okay. So we're going to go into here, and we're just going to go to void. Now, I think that one of them was like where it saved it, and void was a better one. I don't remember. That's fine. Okay, so the bill is voided. But I just kind of wanted to go to. We were looking at Duquesne Light.